on the bottom line, Wilfred, from Nike, 86 cents a share, 28% higher than the quarter before. Analysts were only looking for earnings per share of 70 cents. As far as the revenue number, also coming in better than expected, 10.7 billion for Nike. The expectation was around 10.4 billion in revenues. This marks growth in sales of 7%. Digging through the geographies, the two places you go to first are North America and China. Let's talk North America first. Coming in a little bit light with North America, but really pretty much on target. 4.3 billion in sales in North America. The expectation was around 4.4. That's 4% growth. China continues to be a standout, showing double-digit revenue growth in this region. The Greater China revenues, guys, 1.68 billion, better than the 1.5 expected, and that marks another quarter of 22% growth in Greater China. 6% growth in Europe, Middle East, and Africa. We don't see a lot of growth out of that region, especially now with the economic slowdown. So that was better than expected. And, you know, currency continues to be a headwind. These numbers would all look better if not for currencies. But I'm reading you the numbers that have been factored in already with the strong dollar. And I'll just show you one other bright spot here, which is gross margins, 45.7%, also coming in better than expected. So what this tells us is that despite the global headwinds, the slowdown fears, the strong dollar, which Nike feels, they are continuing to grow in every region of the world, and they're continuing to innovate and get consumers to pay up for their products, which is reflected in the margins, their direct-to-consumer strategy. Liz Dunn is here, Proforma founder, CEO. Also joining us by phone is Sam Poser, analyst at Susquehanna. Has been very bullish. Liz, your first impressions on Nike's results?
Yeah, the numbers look really strong. Obviously, they continue to outperform expectations, and I think there's an expectation that numbers get better from here. They are heading into an Olympic year, 2020, and they're lapping some heavy investment spending, and so I think that going forward, there's an opportunity, and these numbers might be enough for Nike to break out here.
Sam, what's your take on these numbers?
Well, they look really good. I mean, the most impressive, China was really impressive, as was all of the international markets, significantly better than what we anticipated. And they let they let their expenses flow through. So they really, it looks like they got the most out of this earnings report, despite the anticipated currency headwinds.
And we are seeing Nike shares hitting all-time highs in the after-hours session here, surging more than 4%. The conference call does kick off at 5 p.m. Eastern, Liz, and we get a lot more from the Nike call, including guidance. Last time they painted a very bullish picture. We'll get more of a breakdown in terms of digital sales, which has been a key growth driver, direct-to-consumer sales, but it feels like that strategy is really what's driving these earnings.
Yeah, the consumer direct strategy is very important. It's very important for a brand like Nike to make that transition now, and they've done it pretty flawlessly. And so it's impressive. Hopefully we can hear more about that on the conference call. I think we'll also hear about tariff issues and what the outlook is for growth.
How much exposure do they have in Chinese manufacturing?
I believe it's about 25% is manufactured in China. So, not nothing, but I think they are very nimble in terms of manufacturing. Footwear is a more difficult category to move, but I think the outlook is what's really going to drive the stock from here, and it seems like they have a lot of opportunity going forward.
Sam, are Nike unique in shrugging off the impact of the trade war, whether it's sales in China or still North American sales growing despite some of the issues the trade war could have imposed on that?
Well, I mean, you have to think how much of their business is outside the U.S. So, they do produce a good deal of product in China, but they're able to price globally, so they can really manage that exceptionally well. Plus, when you have a ton of innovation, that gives you a lot of pricing power at the same time. So, we really think that Nike is in very good shape as regards to these tariffs. People that have a large majority of their business in the U.S., that's a whole different story. But, small percentage of their business, product made in China, large percentage of their business outside, and a very strong and growing direct-to-consumer business, all are exceptionally strong offsets for that.
So I mentioned